There's nothing that really prepares you for trading except trading. And then it's like baptism by fire because everybody underestimates the difficulty. I had nights where I cried my eyes out, literally cried, and I lost all my money and I didn't know how I was going to, get back into the market. But it was, at that time, it was $4,000. It was later, it was $10,000. I think total I lost $40,000 over maybe 4 or 5 years. That was, might as well have been 40 million at the time. To me, the best thing that can happen to you is you blow up. And especially like we said early, you really need to, because almost everybody that enters the market enters it without the proper degree of respect for it. The market will validate any strategy on any given day. And there's a lot of turkeys and strong winds, and then the wind dies down and everybody comes crashing down to earth. It did not happen overnight. When I first started, I'd be down $200 and I was ready to jump out of a window, out of a building. And it was so stressful because trading can make you sick. Feels like the right thing, especially, the stock goes lower. Oh boy, I buy more now. It doesn't have to go up as much to get back to break even. What I say is you're walking dead at that point. It's just a matter of time and you will meet your demise. That means that if I was in such control that I caused this problem, well, that means that I can cause it not to happen. I can cause the positive side of that because I am the reason it happened. So that means that I actually have control. See the result. There'll be something, and I knew I should have bought oil. I knew I should have bought gold. But can you rely upon that consistently as a strategy? Do you have a positive mathematical expectation that is going to be able to work over and over and over, year after year after year over time? That's the difference, and that's where you got to think in probabilities. You got to think. Your brain has to start thinking as a bell curve. Just this one time is never just this. It's never one time. It's never. You're not going to if you do it one time, you're going to do it many times.
Welcome to this very special 150th episode of the AlphaMind Podcast, hosted by myself, Stephen Goldstein, and my co-host, Mark Randall. Today we are delighted to interview the most requested guest we've ever had from our listeners over all the years that we've been running the AlphaMind Podcast. Trading legend and market wizard, Mark Minervini. Before we head into this outstanding podcast, first we would like to thank our long-term sponsorship partner, the Society of Technical Analysts, the STA, who have been a great partner because they follow a similar emphasis, which is really trading education, trading awareness. They provide fantastic services for communities of traders. They provide outstanding educational services that goes deep into the study of technical analysis, such that it goes to diploma level. And they also more recently have started evolving to provide programs in system and algorithm design and how to systemize technical analysis into trading programs. So do check them out. We're delighted to have partnered with them on offering their STA home study course, which has been developed and produced by many of the world's leading technical analysts and goes far deeper than most of the YouTube videos that give you a brief introduction into technical analysis. So if you really want to learn about this at a far more in-depth level and get a far broader understanding of the different types of tools and methods you can use, do check that out. We're delighted as a partner to offer a small discount on that home study course program and the diploma program that can be acquired from that. Go to our website, alpha-mind.net, where you can learn more about this. And you can also check them out on technicalanalysts.com. Now, on with this week's podcast.
Welcome to this week's AlphaMind Podcast. We're delighted to have Mark Minervini with us. We've been, trying to get Mark on for a long time now. An absolute master of his craft in terms of markets, books, podcasts, programs, thought leadership. I'm not going to describe them because I want Mark perhaps to just give a little bit of relevant background so people understand, why he's doing what he's doing now and where that came from. And then, Mark, perhaps once you've done that sort of brief intro of yourself, I'd like you to go straight into what success means for you in this game. What does success look like? So, Mark, welcome to the show.
Hey, it's great to be here. Thanks for having me.
It's a delight. So in terms of that, perhaps if you can just go into a little bit about some important bits about your background, given the fact that we've got a broad audience, a lot of new people that have never perhaps traded as anywhere near as much as others that listen to the show, and perhaps to introduce the philosophy that you bring together in the books and thought leadership and various other things that you throw through your various programs. Just identify what that value is, and perhaps you can just describe that for us.
Yeah, well, I mean, as far as my background, I'm just going to be very vague, and that is that my background is poverty. That was my background. I grew up in very tough situation as far as education. I quit school at 8th grade, so I had a lack of education. I tell people I've lectured at universities around the country, and I've never even seen the inside of a high school as a student. But so I'm self-educated, and I usually do interviews. And behind me today, I'm in we're audio anyway, I think today. But normally I'm in my library, and I've got about 4,000 books, and I've read every one of them, and some of them 100 times. So I'm completely self-educated when it comes to that, and early on, I was a musician. I actually quit school because I played the drums, and I got a chance. We got a pretty good opportunity to make a record, and it was a real great thing at a young age, 16 years old. I was making records and recording in the recording studio, and I ended up going into that business. I had a couple recording studios, and I was a quote-unquote record producer, but I was a drummer. I was a studio musician, and I was playing live, and that's how I was making my living. And I taught drums to drum students. I had about 40, 50 drum students, and that's how I made a living. And I was taking that money and I was putting it into the stock market because I was always fascinated with the stock market, and I was always fascinated with becoming rich because I wanted to have freedom. And my mother struggled with money all the time. My parents divorced very early. She used to be crying all the time about money, and I said, that is definitely what I don't want to be doing. And that's really how it all started. It was all kind of driven by a desperate situation and having no really alternative because I didn't have a degree. I didn't have any education. So I looked at the market as this place where it had unlimited opportunity without prejudice. And there was really, it was me in the market. If I was good, I got rewarded. The problem is I had no money. So I had to start with a very, very small amount of money. I worked, I saved, I put money in the market. I lost it. I blew up a couple times. I tried to take advice from brokers. That didn't work. And then ultimately started learning sound principles, and over the years whittled that down to where the rest is history. Now it's 43 years later. I've been trading.
Fantastic. And interesting you mentioned music there. I know we've had Tom Barso on the show, and
yep.
he talked about his journey in music and how that helped sort of give him a mindset of inquiry and process that translated quite well into trading. Is that something that you recognize as well?
I think it might be Linda Bradford-Raski. I can't remember, but it was one of the market wizards that said that she thought musicians made good technicians to read charts and things like that. I think so. Tom's a friend of mine. Tom's a great guy and someone that you definitely would want to listen to when it comes to that stuff. Real class act on top of it. I think, being a musician, sports, all those things, anything that requires deep practice and requires acting under pressure, all that helps you. But the bottom line is, as you know, there's nothing that really prepares you for trading except trading. And then it's like baptism by fire because everybody underestimates the difficulty.
Mm-hmm. And in that early career, was there a point when you think, okay, I've now kind of worked this out, I'm now understanding what success actually means in markets? Did that come early, or did you have to wait for that? Well,
what success means to me now is completely different than what it meant to me early on. Success meant money and things, early on. Success now means respect and giving back and passion and freedom and love. And, having love in my life and health in my life is the number one thing. And that's, to me, that's success. If you're happy, that's all that really matters. Some people don't have to be rich to be happy. So being rich doesn't mean you're going to be happy. There's miserable billionaires. But again, it certainly helps. It helps when you can't pay the bills. It's a pretty miserable situation. It's hard to be happy. So money is a great thing. Just a matter of what you do with it. My mother always said, money is a great thing, but if the world comes to an end, you can use it to make logs and make a fire to keep yourself warm. And it doesn't really mean a whole lot, unless it's basically an agreement. It's a barter system. So you got to keep that in perspective.
Yeah. Hi, Mark. Steve here. Great to have you on the show. As I think, as Mark said, it's been a long time coming. We've had, you're probably the most requested person that we've had from people who, we get lots of messages. We're coming up to, I think this is our 150th episode now.
Oh wow! Congrats.
Yeah. So, and we constantly get messages. Can we get Mark on? Can we get Mark on? So it's great to finally get there. And it's fascinating to hear that, you've got a background in musician, as you said. We always talk about that, Mark and myself, the connection between people with a performance mindset, the ability to suffer setbacks and just keep on going. I'm fascinated by what you said. You blew up a couple of times because, and a couple of other things there as well, along the lines as it's going to take you much longer than you think. This blowing up a couple of times, one of the things I was always fascinated when I first read Jack Schwager's first book, and I know you featured in one of the latter editions, was that they nearly all blew up. Nearly everyone blew up.
Yeah.
And you can go through and you can read rates, and they've all got their blow up stories. And then Linda had her one. She's been a guest on here. She told us about it. It's almost par for the course. It's almost what you do. You can't learn almost without that. I always say to people, if you're going to blow up early. You don't want to blow up late.
Right. Yeah, absolutely. Well, first of all, as you just pointed out, there's no straight line to greatness, and all the professions that you said, in anything that's great, anything that you excel at, it takes time. I think as far as blowing up, I agree with you. First of all, yes, you want to blow up early. Well, some people have a lot of money. They start off with a lot of money, and blowing up early is a major setback. That's where I was fortunate to be poor. And when you're poor, you start off, you cut your teeth on a small account. And although at the time, believe me, I had nights where I cried my eyes out, literally cried, and I lost all my money, and I didn't know how I was going to, get back into the market. But it was, at that time, it was $4,000. It was later, it was $10,000. I think total I lost $40,000 over maybe 4 or 5 years. That might as well have been $40 million at the time. But a person who works hard and works a normal job and can save money like that, can save thousands of dollars and can start over. If I were to blow up today, that'd be a whole different story. That number would be a lot larger. I worked for 43 years to get to where I am now. So yes, blowing up early is better. To me, the best thing that can happen to you is you blow up. And especially like we said early, you really need to, because almost everybody that enters the market enters it without the proper degree of respect for risk. They don't understand it. And because the market will validate any strategy on any given day. And there's a lot of turkeys and strong winds, and then the wind dies down and everybody comes crashing down to earth and realize, and sometimes they don't realize, they don't realize that, and then they keep doing it. And then over time, after a few blowups, you start to say, maybe I'm not so good at this. I need to find out the right way to do it. And then for some of us, we realize that it all comes down to risk management. Some people continue doing the same thing over and over, and that's where mindset comes in. The real difference between the longer term, winners over having a career at this is going to all come down to mindset. And so I wanted to also say that, I've been wanting to meet you too, because you have a nice book on mindset, and there aren't really many books on mindset to begin with, and there's certainly not many good books for trading in particular. On regular mindset, there's lots of books, but trading psychology, there's not a whole lot of books. You got Mark Douglas, you got Ari Kiev's books, your book. There's a few books that are out there, but not many. So it's good to have someone who's doing what you're doing.
Thank you. I appreciate that. And that means a lot coming from you.
I want to know from your perspective, what does mindset mean in the context of trading? I mean, I guess we're talking to an audience here that hugely varied. that may not have even asked, they hear it. They hear this word mindset for trading. We've got our own opinions on it, of course, but from your position, Mark, what does mindset mean? Is it attitude? Is it behavior? Is it a bunch? Is it emotional? Is it control of those things? What does mindset mean to Mark Minervini?
Yes, it's definitely emotions. It's emotions. It's dealing with the emotions and the thoughts that are going to go through your head. And it's basically, it comes down to what things mean to you. I mean, that's what my mindset book, I have a mindset book called Mindset Secrets for Winning. And it's not a trading mindset book, but certainly everything in it is what I applied to trading, but it can be applied to anything. Sports, I've been fortunate to work with Olympic coaches, Olympic athletes, Major League Baseball athletes are good friends of mine, and NFL players, and a lot of really high level people in business and sports and trading. And I noticed there's some common denominators there on how they view things and what they focus on. And that's what my book's about. My book's about those common similarities. We look at stocks. I have what's called a leadership profile. So when we go to buy a stock, we're comparing it to what the biggest, fastest winning stocks in history have done. So it needs to look like those stocks. It needs to have the characteristics. I did the same thing, and I've been fascinated with high performers since I was a child. I was always fascinated with people who were, Bruce Jenner at the time was the Olympics, and I watched a lot of sports, and I was always fascinated with that. And what I did was I said, just like a stock, I'm looking for those characteristics. Well, and this is what's called reverse factor modeling. There's a big difference between back testing and reverse factor modeling. Back testing with stocks is you go and you just test everything and find something that correlates with a winning strategy, and you'll always find something. But the problem is, just like someone wins lottery every week, but every week the name's different. The strategy you have to re-back test next year and the year after and the year after, because that's not going to work in perpetuity. Reverse factor modeling is when you take already a winning set of variables, or let's say a winning group. So let's say we're looking at gold medalists. Okay, well, all these gold medalists, so we looked at the last 50 years of Olympics, and we said, what do all the gold medalists, what do they have in common? What's like the number one thing? Diet, exercise, certain way they're thinking, things they're doing, routine. Okay, well, you know what? If I find that 92% of gold medalists eat Wheaties, I think I'm going to probably start eating Wheaties, if I want to be a gold medalist. That's a pretty high percentage that is something that is meaningful in these people's lives for a reason. So that's what I've done in my book, with the mindset book. And that's what I did in my life. I studied the best and then found the common denominators, and then had to start figuring out how to go from my poverty mindset to living in a new identity.
That's fascinating, and there's a lot there to unpack.
There's a lot there. There's
a brilliant question, Mark, and I'm going to hand it back to you because you asked the question.
Thank you. Well, I think it's relevant, and I think also I'm very curious about performance as well. I mean, I'm a golfer. I play tennis as well, and I've grown up watching all sorts of sport, and I was noticing.
You don't look like a golfer. Come on, that's a joke. Not a golfer, a golfer. I'm making fun of your accent. Come on. That's from Caddyshack. He says you got to kill the golfer. He says, I'm sorry, but if we kill all the golfers, we're not going to have a business here. No, the golfer.
Yes, us Brits have got a certain way that we'll get some payback from you.
I know. I'm giving you the American crude humor. You guys are a little classier than
that. So, just going back to being curious about, noticing, and actually that noticing thing's quite important, right? So if you've got an appetite to notice the difference and to pay attention to what others are doing, and to register that. And kind of then frame it for your world. I think that is really, really important. Like in tennis and golf, there are rituals. There are rituals that people are using to maintain attention, to stop distraction, to have a rhythm about their performance. that is very much there because they're bothered to do it up at the top elite end. And I think at the normal end, people aren't doing that. So the difference is that, there's, so kind of knowing that that's out there, that, at the higher end, people have gone beyond the norm in terms of their performance, and they're really sort of molecular detail, paying attention to subtle things of setup, to subtle things of, linking mind and body together to create a rhythm of performance.
Yeah.
You can notice that. And I think it's important to notice that, but also recognize that if you're in the world of trading, you got to try to figure out what that is for you.
So let me just interrupt you for a second, because you're getting away from the most important point, and you already made the point. And that is that the very first thing that you have to have is awareness.
Yeah, exactly.
Yes, awareness, and that's what you said in the very beginning. Awareness is the number one thing that you have, and that's why you read these books and you get advice from people to create an awareness. Things like, wow, I didn't know that. I didn't realize that I was doing that. Or this is where we want to spark that. That's why we do what we do, because we want to inspire and we want to create curiosity. And once you get curious. That's why children learn so well, and they don't really care about failure. They fail and they just move on. We get older, we get hung up on failure. We don't move on, and we don't get curious anymore. We get scared. So you have to have awareness, and then and with awareness, you have to have intention. So awareness creates where okay, this is what's happening, and now what is the intention? My intention is to build up my strengths, build up my weaknesses, improve on my weaknesses, and really maximize my strengths. And that creates where now you can have a program and have a discipline. But without awareness, as you said, and that comes in self-reflection, and that comes in post-analysis. So in trading, you're going to look at your trades, you're going to look at what you do, the actions. And then some people, they keep journals. When they start marking these charts up with their trades, they'll also put in there and journal down their emotions at that time. So now if you were to journal my emotions back 35, 40 years ago, you would have found that you should be buying when I'm selling, and you should be selling when I'm buying. And then fast forward 10 or 15 years, it's just complete opposite. If you were buying when I was selling and selling when I was buying, you'd probably lose money. So that's where you realize that you've become competent as a trader, where your gut starts to be right. In the beginning, most of the time, our gut is wrong. When we're scared to death, that's when we probably should be buying. But you have to have an awareness of all that, and that's where it starts.
Sure. And of course, actually, just focusing on being scared to death, and what that means physiologically, that's super stress comes from that. And actually, if there's stress presence, then your awareness is turned down to like one on the scale. And so managing stress through the process as well helps to maintain that level of awareness that you need. So I think stress management is critical as a base for performance to emerge from. Because I think, being too stressed, actually you start to close down some of these things. This curiosity, and discipline falls apart with it as well.
So the thing people have to realize that they have to grow into that stress level. So I race cars pretty seriously. I've got a bunch of race cars. I'm on the track quite often. I shoot pistols in competition, where you go and you've got a deadly weapon in your hand. You're running as fast as you can and shooting all over the place, and you've got a whole group of people, your peers and spectators, that are watching you. These are all very high pressure situations. I did not just walk into those and do those at a high level. It took a lot of time to get to that point. So it's the same thing with trading. We were just talking just a week or two ago. My assistants, a lot of people who are watching this probably know Mark Ritchie and Brandon Hedgepath are my two assistants. They're amazing traders. They started off with 50 grand. They came to my first Master Trader Program workshop 15 years ago. Brandon sold his car to pay for it. They had $50,000. They collectively, they partnered up together and decided they were going to manage money together. They turned that $50,000 into over $20 million. They were paying customers of mine for 10 years, and then I hired them. And now they've been my right-hand two men for a number of years now. Well, they started with 50,000, and just a couple of weeks ago, in one day they had a drawdown for $500,000. And so I asked them, in front of our members, we were talking in a session, and I said, how did you grow into that? I mean, you go start off with a $50,000 your whole account, and now you're having a drawdown of $500,000, and you go to you leave the office and you go have dinner with your kids and everything's normal. I had to grow into that too. My wife says it's amazing. You can go in that office, you come out, you could have a bad day, and I never even know about it. I would never even know. That did not happen overnight. When I first started, I'd be down $200 and I was ready to jump out of a window, out of a building. And it was so stressful because trading can make you sick. It could kill you. People don't realize that. It could literally kill you. Money stress is number one reason for divorce. It's a big stress. So you've got to learn to have not only mental stress protectors, but that's where you've got to manage the risk to a level that is acceptable for your own risk tolerance. And you grow in that tolerance increases over time.
Yeah, but I want to hear about that, because the growing into stress, okay, there'll be a lot of people listening and they're going, well, how do I do that? And I get asked that a lot. How do I cope with this stress? How do I deal with it? What is the solution? And I'm like, there isn't a solution. Not a simple one. There is a way though. And there's a way you have to develop, and you have to grow, and you have to become better, and you have to improve. You've got to really start to understand this is. And it's really interesting because you mentioned something about identity. And I say, you're not a trader until you adopt or develop the identity of a trader. Just saying I'm a trader doesn't make you a trader.
Definitely not.
And just doing it for 5 years, in my opinion, doesn't give you the identity of a trader. Okay, and I see this, and I see people that I work with for a few years. Some of them are new, some of them are in institutional firms, and they're coming from analyst roles and that. And I see them develop in every way. I see the language change that they use. I see how they talk about the market. How they talk about things like liquidity and sentiment. And they're still not there yet, though. But I'm seeing this kind of almost like a very slow metamorphosis happening.
Yeah, well, you will, there's something just not related, but I often say, like, if somebody comes to the shooting range, I can tell their level of skill with a pistol by the way they open the bag and take the gun out of the bag. You just show me a guy how he takes the gun out of the bag and handles it for the first 4 seconds, and I can tell you if that's a grandmaster shooter or if it's a beginner shooter. Same thing with traders. I could talk to a trader for maybe 5 or 10 minutes and tell you almost everything about them, as far as personally, about the way their emotions, and evaluate them very, very quickly, because there is a certain way they talk and the way what things mean to them. What things mean to a professional is very different than what things mean to an amateur. A professional, it's impossible to get to a professional level without having failure mean lessons. It doesn't happen. But those who failure doesn't mean lessons. It means failure, and that's why they fail and then they quit. So there's a crossover of the meaning. But I want to make one really important point. This is really important. I want to make sure I'm very clear with this and everybody understands. When I say grow into stress, and I said that my assistant took a $500,000 loss in one day, I don't mean that you grow into stress where if you had a $1 million account and you lost $500,000, that should feel good and you grow into that. Absolutely not. That 500,000 represents 1 or 2% of their portfolio. Okay, so but you have to grow into the fact that you might take a 5% loss when you've got a $100,000 account and it's $5,000. Well, now when you have a $10 million account, that 5% loss is much larger, and there's nothing different. It's nothing different. The number's bigger, but the percentage, you're going to have to deal with that bigger number and focus on the percentage and learn how to operate in those larger numbers. That's a hard thing to do. Now, most people don't get to that point. They don't take an account of something like myself, where I start with a few $1,000s, and now I buy $10 million in one position. That is not what most people are going to end up getting to. So, but they may get to the point where even just tripling their account, or to 50,000, to a few 100,000, or whatever the number is, that it could be even more challenging. It could be more stressful to be trading. Like, for instance, when I first started, I had way more stress trading $5,000 then than I have now trading 50 million. I mean, I literally have almost zero stress at all. I don't have any stress trading at all. Virtually zero. So I think there is a solution. I do think there is a solution.
We'll return to the podcast in a second. What are you doing to improve yourself as a trader? At AlphaMind, we work with traders from across the markets, both professional and retail, and trading businesses, to help people improve their performance. A focus on developing performance is one of the few areas that is very, I suppose you could say, under practiced in an industry that is really a performance industry, and where developing key aspects, key behaviors, key mindsets can have a huge impact on how you work, how you perform, how you manage risk, how you increase size, how you maintain your sense of self in the face of uncertainty. Do feel free to check out our services as performance coaches. Go to our website, alpha-mind.net, to know more, or email us info@alpha-mind.net. Now back to the podcast. Yeah, and I'm going to throw something at you now, and I'm going to guess, but you can throw process. If you have a process,
yes,
and time says that it works, and you've got risk management within there, and you've got a risk management structure in there, it's almost like you become untouchable. And then the stress eases significantly. Not that it ever goes, in my opinion, because if it goes, then you don't really care anymore.
You're not untouchable, but you are managing it's like I boxed too. When I was young, I did martial arts. I boxed up until I was 50 years old, believe it or not. And boxing is if you just go in there and you don't know how to protect yourself, you just get knocked out cold. But, a professional can go in there and, even, who was it who went in with Floyd Mayweather, the MMA, oh God, everybody knows. They're saying, how could you not know that? The Irish guy, yeah. I'll think of it in a second. But he wasn't even a boxer, but he was a professional enough to be able to go in there and hold his own and be respectable, and really did a very respectable job. Really did a phenomenal job going toe to toe with a boxer. He's not even a boxer, but he had certain level of expertise at fighting, that knew how to keep himself out of harm's way to a degree. And that's trading. You're not going to eliminate risk. All you can do is mitigate it and reduce it as best you can. And there's a price for that. It doesn't come free. There is a price for that.
That was Conor McGregor.
Conor McGregor, yeah, sorry, yeah. I don't know how I could forget that, but so Conor McGregor did a really good job. He ended up losing, but he did a fantastic job. And I think he lost with a lot. He got a lot of respect the way he lost because he managed it quite well. He managed the risk really well.
I often talk about boxing being one of the closest sort of metaphors for trading, and that idea of risk management is gloves up, keep your head covered, down as well, get your arms down, keep your midriff covered, keep your eye on.
But remember, if you don't swing, you can't win, right?
Yeah,
you
absolutely.
Can't win. So there is you have to take a risk. You're gonna have to peek your head out there, and when you throw your jab, when you throw a big right, you're exposing yourself.
Yeah, you got to learn how to play offense and defense as one.
But you pick your spots. Pick your spot, and by picking your spots and timing them properly and respecting risk, you can mitigate that. You can mitigate. Same thing with trading. You pick your spots, and you're doing it, and you're knowing the risk before you even get in. You're already knowing what the potential consequence is.
Okay, so how about this for mindset? And this was a story which was told to us by one of our guests, and I can't remember. I think it was Darren Hughes, maybe, who was a professional sports coach, and he was talking about, he works with a lot of boxers, and he says, and this now comes into ego, okay, one of the biggest mistakes he sees with young boxers is they get knocked down and they spring up to their feet. They want to show they're not hurt.
Right.
Okay. And he says to them, you have to take the full count as much as you can. Okay. You've been knocked down. Okay. Your mind's not on it. Your legs are jelly. Your opponents just can't wait to come at you again. Okay. You got to take 8 seconds of that full 10 seconds just to compose yourself. Okay. Just to get yourself ready and think, what am I going to do when I get up again? How long to the end of the round? Can I get there? I'm not going to go back in swing, because you go back in there and swinging, your opponent's going to get you down again. Okay. But so many of them, they want to show they're not hurt. And
they pop back up and then get knocked out.
Yeah.
And they get attacked. Like, that's contingency planning. That's why we have coaches. That's why boxers have trainers and coaches, because we need to contingency plan, and those things have to then become automatic. That's not something that, when that happens, you should be thinking about. You train that boxer, and you train them over and over and over, and then when that happens, it's an automatic response. But see, if we let the emotions, and now we're on mindset, if we let the emotions override, well, then we don't really have a plan. The plan is just driven by the feeling and the emotions, and that drives us to do things that are maybe self-defeating.
100%. 100%.
So that's why in trading we want to have a plan for if what happens if stock goes against us? Where am I getting out? What happens if it goes up and I get a real quick profit? What do I do with that? What happens if my internet goes out and I don't have any? I've got a bunch of exposure on, and I don't have any platform. I don't have any trading platform. I know where every Starbucks is. I have backup systems. You should see the setup that I have. There's no way I'm not going to get caught. And I have a mirror account. I have a mirror account for every $1 million that I have in an account. I have it in another account. I have it mirrored, because what if that brokerage, and I have a story, but I probably don't have enough time, where I had a problem where a brokerage firm literally went down. Believe it or not, a satellite. This was in the 1990s. They had a satellite, an MCI satellite in space that got hit with an asteroid. I'm not even kidding. I'm not making this up. The satellite got hit. An MCI satellite knocked out. It was like some of the whole East Coast. The brokerage firm was down. I had to jump in my car from Connecticut and drive to New York City, 110 Wall Street, and go up the elevator and go knock on the door of the place. Say, what the heck's going on here? And they told me the whole system's down. And it was that day that I said, you know what? I can never have this happen again. There's no way. So now I have another account where I can short against those. I can short against the box, if you will. So if I'm long 10 stocks in one account and that account goes down, I can short them in another account. Just, that's just some of the contingency plans. You should have a contingency plan for everything, every potential outcome, especially if the outcome is devastating. So, and that contingency playbook will grow over time. As you experience things, it will grow, and you will have a bigger and bigger playbook. And pros have a very, very solid playbook. They got pretty much everything covered. That's why they're pros.
Yeah, that's very interesting. I was at a wedding at the weekend and met someone that came up to me and said, I've got my pension fund in this. I'm now trading my pension fund. And I started to ask a few questions. I said, so you got a segregated account in your brokerage. He said, what does that mean?
What does that mean?
Okay, let me just explain the potential risk of having an account that's blended with the other risks of that business.
Right.
How in the current environment where you have system risk because of the size of volatility and the size of problems that can emerge. Technically, as you say, it could be a technical failure somewhere, but you do not want to be caught in a business that is going to administration and your funds are blended in, because you're not getting your money back, maybe at all. And we saw that with Bearings, we saw that with Equitable Life in the UK, where people were losing, entire life savings. And I think this is an opportunity to put that message out there for folk that are trading. Make sure you got these protections in, particularly around money, and ask the question to your brokerage. We were on a course recently and someone said, I've had to change my broker because I've just realized my funds are blended in with everyone else's. And, I've had to drop service and pay more money because of that. but I'd rather have control of my money and knowing it's safe. And it is a very big question to ask. And I think it's right that we cover this. A lot of people out there need to have these fundamental questions. Ticked off. It's quasi contingency, of course, but some of it is, am I going to wake up in the morning and I have no money, not because I've traded badly, but because somebody else has and they ran out.
Yeah,
that's the reality.
You mentioned Barings Bank, and I know Nick Leeson, and I actually interviewed Nick Leeson. I think it's online. I think it might be on.
He's been on our show.
Okay, yeah, and I know I looked at that as a great chance to learn. About there's an epic failure of risk management, and the ultimate what I call revenge trading. Now, revenge trading, and relating this to trading, going back to boxing, the boxer who gets knocked down and jumps right back up, that's the trader who gets clobbered and then doubles down and comes right back in and trades twice as large because he wants to get it back.
Yeah.
And that's what most people do because it feels like the right thing. Especially, the stock goes lower. Oh boy, I buy more now. It doesn't have to go up as much to get back to break even. And that's just what I say is you're walking dead at that point. It's just a matter of time, and you will meet your demise.
Okay, so I got a client who I was coaching yesterday, and he will be listening to this when we play it back, and I'm going to point it out to him because so much of my conversation with him yesterday was about these sort of things, the sort of revenge trade, and the sort of, he works his backside off to get his account going, get it forward, works really hard, and he finally thinks he's there and he's got it. And a lot of people, I think everyone will resonate to this at some point. And then something happens, and there's a slip, there's a miss, and he just starts fighting with the market to make that money back. And as he does, so does all that money go? All that money he made just disappears, and then he's in the red, and then he fights harder, and it's a repeat pattern. And it is so hard not to get into that, but then you got process, and it makes a huge difference. Risk management, that's when you need it. You are the biggest, when it comes to risk management, of all the contingencies, you are the biggest threat. You are the biggest danger.
Oh, absolutely. It's all you. It can't be anything else. That's the beauty of the market. It's you in the market. Okay, so it can only be you. That's why it's so sobering. It's a sobering business because it can only be you. You are making the decisions if you're good. And that's what I loved about it. See, I like that. I love responsibility. I learned responsibility very early on. And I love personal responsibility. I love it being me because you know what? If in fact, this is again to mindset and the way what things mean to winners versus what things mean to losers. If in fact I fail and I cause it, okay, that's people look at that as blame. I look at that as control. That means that if I was in such control that I caused this problem, well, that means that I can cause it not to happen. I can cause it. I can cause the positive side of that because I am the reason it happened. So that means that I actually have control. But now if it randomly happens to me or you do it to me, well, now I'm a victim and I have no control. So I love when I'm in control. But the thing is, and you said something just before, this is something that, if you were to read 100 trading books and go listen to 1,000 podcasts, you hear the same thing over and over. Jesse Livermore, you go all the way back to the 1920s. Cut your losses, ride your winners. Why do people not do it then? Why do they not do it? Well, there's a couple reasons. One, and this is how I like to sort of bring perspective to this. Every week somebody wins lotto. So people play the lotto. You always see a winner. There's always somebody winning. But every week the name is different. And the name will be different every week for the next 10,000 years. Okay, the chances of you seeing a lotto winner 3 weeks in a row or even 2 times or 3 times in a decade is zero, pretty much zero. Okay, it's so negligible. But you see the winner, just like you see the guy who I have a neighbor. He's a Bitcoin. He made $60 million in Bitcoin with a $200,000 investment. He's in the right place at the right time. All right, he's not a professional stock trader. So here's the other thing. Here, this is the next level of putting perspective. You play ace-ace, you play king-king, right? In poker. You lose. You lose with it 3 times in a row. Do you not play aces anymore? Do you not shove your money in with aces? Unless, if you're an idiot, yeah. But if you know the probabilities, you're going to shove your money in with aces next time because it's the best hand you can have. Okay, let's flip that. You win all night long. You just keep winning, playing 2-2, 4-4, the crappiest hand, 7-4, unsuited, and you're winning all night. That's a strategy? No, right? So the result doesn't justify the means, but that's what people do. They look, they see the result. I mean, tomorrow something will go up. There'll be some group that's hot. There'll be something, and I knew I should have bought oil. I knew I should have bought gold. But can you rely upon that consistently as a strategy? Do you have a positive mathematical expectation that it's going to be able to work over and over and over, year after year after year over time? That's the difference, and that's where you got to think in probabilities. You got to think. Your brain has to start thinking as a bell curve.
So I'm going to come back because I made a note of what you said earlier, and you talked about reverse factor modeling. Okay. Mm-hmm. Now, for me, when I heard you say that, I thought, wow, what you're looking for is you're looking for situations where the probability is massively in your favor based on past evidence, which I think, to me, and that is not back testing. Because a lot of people go around in the world, and I'm a fan of back testing, but I think people use it incorrectly. Okay, what I see you doing is looking for. It reminds me of sports betting. The really successful sport bettors. Okay, they don't go out and bet on the best team winning. They go out there and they've created situations where they look for context where the probability of winning is not priced incorrectly.
Right, inefficient pricing.
And therefore, you always take, if that setup is right, you always take those bets. Maybe that's not quite the best description, but it feels like this is
But by default, a stock that goes up, especially if it goes up rapidly and for an extended period of time outperforms, by default is inefficiently priced. Because if it was efficiently priced, it would only mimic the market. It couldn't. It's by default. It's inefficiently priced. So you're 100% correct. That is what you're looking for. You're looking for inefficient price securities. That's what I look for.
Yeah. Now,
of course, there's the okay. How do you do that? That's the next question. I wrote two books on that.
Yeah, but that's the science of this. That really is. Mark, I mean, I'm conscious of the time, and we've done sort of nearly an hour. And I know you. Bob said that we wanted to keep it to an hour or 45 minutes. I think he said actually. So
I can go a little longer if you want to go a little bit longer.
Okay, brilliant. Mark, how do you feel about that?
Listen, I think this has been super educational. I think there's opportunity for Mark just to perhaps share with us some of the titles of the books you pushed out and some of the key themes that people will find in those books that support what we've been talking about this evening or this afternoon in your part of the world. And also starting to talk about what you're putting out there in terms of courses and programs that people can consider as part of their learning journey. What resonated with me particularly early on is this fail early, but for God's sake, learn the lessons of failure. And but actually, some of those lessons come from experience and reading the methodology that I've shared by others. Certainly, that have got true capability. So, let's just briefly talk about some of your books and why people should read them, the key themes, and then perhaps share some of the courses and programs that we know you've got on the immediate calendar.
You guys are so politely British. I appreciate it. You are, and that's a good thing. So I don't want to take a bunch of time, and I'd rather have you, ask me questions and for things that can help people. But certainly, some of the things that can help people, for a very small amount of money, is to buy books and read other people's books that have experiences and know things that you don't yet know, have an experience. So I've got 2 books. The best thing is to just Google my name, and a whole bunch of pages will come up, and you can go to my website, minervini.com, and all that stuff. We've got a great master trader program coming up, which we've done for 15 years in a row. It's probably the most comprehensive trading educational workshop in the world. And that's coming up. And I don't even know, I threw away the paper. I had the dates. I think it's November 8th and 9th, and then the next weekend. But just go to Minervini.com and everything, my platform, everything's there. And you could learn everything you need to know.
Okay, fantastic. And I'll put all those details out on the notes. So if you're listening to this podcast now, just go into the podcast provider, Spotify or Apple or whatever. There'll be all be there in the notes for the podcast. We will return to this podcast shortly. Just a quick reminder about our podcast sponsor, the Society of Technical Analysts, a brilliant organisation which help traders and analysts from across the spectrum of markets. They have many fantastic programs, including the new Technical to Trading System program. Also, do check out their brilliant home study course, and AlphaMind listeners can get a discount on that. Just go to our website, alpha-mind.net, to find out more about that. You can find out more about the Society of Technical Analysts by going to their website, technicalanalysts.com. Now back to the podcast. Is there anything you sort of want to ask, Mark, before we sort of finish and get to the end of this? Anything that's sort of really on the tip of your tongue?
No, I'm a better interviewee than an interviewer, to be honest with you. No, not really. I mean, I'll go wherever you want to go. I know this is mainly about mindset, but I'm sure most people that hear my name are going to want to hear about trading. Yeah.
Well, I mean, that's, I think that'll be more about when, on some of your other podcasts, and I'm sure you've done many. I do have one question on trading because, and again, I have a similar process to this, and a lot of people, tell me about your process does this. So a lot of people make the mistake of adding as the market goes against them.
Right.
Okay. There are contexts and situations where I feel that's okay. That's usually if you're on the inside of the business, if you're a liquidity provider, if you're a market maker. Okay. But most people are working from home, trading for themselves with limited money. Okay. It feels intuitively right, but I believe it's actually very dangerous. And I believe that's a big part of your philosophy as well. Is that correct?
Well, I have reasons for adding to positions as they're moving up. I want the position to show me that my first decision was correct. I don't want to add good money after bad. However, let's just say your strategy is to build a position between the price of 20 and 22, and the stock's trading at 21.50, and you go in, you buy some of it, maybe you buy 25%, it comes down to 21, you buy another 25%, maybe it comes down a little bit more, and you finish up the position, and now your average price, let's just call it your average price is, between 20 and 22 is 21. And now your stop loss is based on that average price, and let's just call it 19. All right, you have a 10% stop or so. So that would be fine if that's part of your positioning, and your position sizing is to ease into the position and to buy it maybe on a light pullback. That's fine. Even let's just say the stock gets killed and it's down huge. It's down 20% today on news. Okay, well, that's fine too. If you want to buy, you want to bottom fish it. But the problem comes in is you have to have an uncle point. There has to be somewhere where you throw in the towel and you protect yourself from a larger loss by taking a small loss, because there is no other way. There is no other way. The only way to protect yourself from a large loss is to accept a smaller loss. Now, again, there's lots of other reasons why if a stock was down very big, I'll give you one. Let's just say stock gaps down and it's down 20% today and no news, okay? Let's say there's no news. And you buy it right at the low, and it doesn't go any lower, and maybe it ticks up by $0.50, a little tiny bit it ticks up, but it doesn't go lower, so it doesn't stop you out. Okay, well, now you have overnight risk. Because the stock acted so poorly and was down so big, maybe tomorrow the news comes out. Sometimes the stock goes down real big before they really drop the hammer, and then the next day it gaps wide open. So now, does it mean a stock going up can't go down and can't gap down the next day? But this is about probabilities. When you have a stock that's acting that abnormal, something is obviously wrong, and a lot of really big institutions want out. And you want to align yourself with buyers, because the only way a stock's going to go up a lot is if you have big buyers. So I want to be where the buying is. I don't want to be in the selling and try to guess where the stock might go. I I'm a trend follower and I'm sticking with what's happening in the market and bending with the market. I always say I'm a caboose. The market's the engine and I'm the caboose. So that's one style. A value investor would be buying that downside move, but the value investor might have much larger stop. They might, because they go for big moves. They'll hold companies for years on end, and their average gain might be a lot bigger. It comes down, like I said before, to the bell curve. So, what's your bell curve? What's your average gain? If your average gain is 10%, well, then you obviously can't take, and let's just say you're right 50% of the time. You obviously can't take bigger than 10% losses, or you mathematically will lose money. Well, if your average gain is 100%, well, that's a different story. You might be able to let a stock drop down 20%, and that's part of your strategy. So my point is, I'm going to bring it back to the original point. The original point was about adding to a losing position. If you took your full position, now I'm going to show you the wrong way to do it. You took your full position and you set your stop, and now it goes down to your stop, and you go, you know what? I got a feeling about this one. I think this time I'm going to break my rule. It's called the just this one time.
I used to call it the Stephen Goldstein rule when I was
And here's the thing with the just this one time. Just this one time is never just this. It's never one time.
Nope.
It's never. You're not going to just, if you do it one time, you're going to do it many times. It doesn't become the exception. It becomes the rule. And the more you do it, and God forbid you get rewarded doing it, then you're a dead man. You're walking dead. So when you start saying just this one time, you are already in critical condition. You are in critical condition, okay? You have to realize that. So that would be where you're averaging down. You're doubling down. Brokers use this all the time because they can't admit to a client that they just sold them on this is the best thing since sliced bread and pounded the guy to death to buy it. And then 2 days later, bad news comes out and the picture changes dramatically. They don't want to fess up and say, hey, I made a mistake. It's different now. Now we got to get out and we got to take this loss because it's moving against us. The brokers say, oh, the clients will fire me. And maybe that's true. And maybe the business is tilted the wrong way. But the bottom line is, you know what they do? They say, double down. The thing's down 20%. If you liked it at 20, you got to love it at 16, because now it only has to go up half as much and you'll get your money back. Oh, now great. Now we're trading for break even. That's great. That's a goal. Let's trade just to get our money back. It's just ridiculous, but this is what happens to the majority of investors because they're driven by emotion. They're driven by bad policies to begin with. They don't even know where to start because they don't even have good principles to begin with. And then even when you do have good principles, you need the discipline to follow them even when they're not working. That's process. You got to stick with process and you have to trust the process. And you said in the beginning, I'm going to take you all the way back to the beginning because I have a good memory. I remember everything you said. You went back in the beginning. You said to me that you have a process. You have a process and you stick to it. Yes, but see, here's the thing. I've been doing it for 43 years. I've made tens of millions of dollars with my process. Of course, I stick to my process. My process has proven itself. Now, you're just starting out. You don't have that. And that becomes a lot more difficult. So now you got to trust somebody else. That's why I'm not going to go out and go use the process of some kid that's 24 years old that just got a YouTube show and hasn't made $100 million trading and hasn't stand the test of time of 30 or 40 years. I want proven. I've gotten into trouble, not trouble, but I've gotten, feedback from this, negative feedback where people say, I used to post a lot where I would say, I'm not going to listen to a coach who hasn't already been successful. Then they're like, okay, well, there's coaches that are great basketball coaches and they never played basketball. There's great basketball coaches that were crappy basketball players. Yes, but here's the difference. Once they prove themselves as a coach, I will listen to them. but they also have winning records as coaches. So they are successful. They don't have to be a player, but what I'm relying upon them to do, I want to make sure. Now, if we got a guy who's coaching traders and all his students are all killing it, well, that gives me some proof that coaching is working. But I'm not going to just blindly just go and listen to somebody who can't. I don't believe somebody can teach you how to make $50 million if they haven't made $50 million themselves. Why wouldn't you do it for yourself? I don't believe that. Sorry.
Yeah. No, I always say, you have to have spent time in the trenches. If you're going to do this job, if you're going to be coaching people, if you're going to be helping them through I don't know, like the swamp that this job is, you have to have been there yourself.
I'm going to leave you with something, and this is really the pivotal point in my life. It goes for markets and in life, okay? In the market and in life, every single day, there's great things happening and there's horror stories. Every day, both of them, you could do a headline on. Okay, there's horror stories and there's wonderful things happening in life every day. People are winning, people are enjoying life with passion, and there's people that are miserable and depressed and dying. It's all happening. But with me, when you are going to go into the markets and you go into life and you are venturing forward, you have to decide what you want to be part of and what channel you're going to tune into, because all the channels are playing at the same time. When you get in your car, you know what? While you're on one channel, all the other channels are playing. Somebody else is listening to the other channels, and they're all playing simultaneously. The only thing you're going to hear is the channel that you tune into. So I very early on said, you know what? I've seen poverty. I've seen a lot of bad things, and I see a lot of good things. I'm going to tune into the good things, and I'm going to learn about those, and that's going to be my process. And I'm going to trust it. I'm going to trust it, and I'm going to stick with it, even when those people that are not winning are telling me I'm wrong.
We should have started the podcast with that.
You will never hear. You will never hear.
I might put that as an excerpt.
That's why I said I was going to end with it. So now you will never hear a highly successful person discourage someone. You'll never hear a highly successful person, an Olympic athlete, tell somebody who's striving to be an Olympic athlete, "No, don't do it. You can't do it. It's too hard." You won't hear that. You only hear those discouragements from people who never did it. That's the thing you have to remember. So when people discourage you, remember, check their background. I guarantee you, they never did it. They have no credibility. Don't listen to them. Listen to people who've done it, and you'll be encouraged, and you can do it too, because that's the way it is. We're encoded to get better. We're encoded. There's going to be people doing better things than me and you. The records are meant to be broken, and that's the whole idea. That's life. That's human beings. We're amazing.
You know what? I love that. Mark, I'm going to hand up to you to just sort of wrap this up, because this has been brilliant.
I mean, some people say that the AlphaMind podcast is one of the best trading educational podcasts in the world. I mean, we're number one in the UK for these things, and this conversation highlights why. You know, and I suggest that if you're an early years trader, then you re-listen to this conversation a few times and follow some of the guidance of Mark. And of course, Minervini.com for significant amount of resources that are available to you. So I think, Mark, we're super grateful you were able to join us in this time and spend a lot of time with us and going so deep into such meaningful things. And we thank you for that, and I'm sure we'll see you again on the show.
Well, I'll give you the credit that you deserve, because I usually after any time I do these shows, I've done literally thousands of shows over the years. I always kind of grade it. I'll look at it and say, hey, or my wife will say, hey, how'd it go? And I think of 1 to 10, and I really rarely ever get above a 6 or a 7, because I'm kind of hard on myself. I'm like, I could have done better. This has a lot of really great material in it. This has got some deep stuff that really, as you said, there's a great deal of unpacking that's needed. And I think it's a great job. It's a great place to jump off to if you haven't read your book, my books. This is a great place where maybe those things will mean even more, that they will be looked at in a new light, or maybe even reread those. But I would grade this as a solid 8 or maybe even a 9. This was really good. So maybe you guys are just, very, like I said, you're very, very good at this in some way that I don't understand.
It's the polite Britishness coming through.
Yeah. Well, there's one thing I always say: if you have the choice of being kind or being not kind, always choose kind. And Brits are kind even when they shouldn't be. a lot of the time.
Great. Well, on that bombshell, we'll end the show.
You guys got class. I appreciate it. You're a class act. Good show. I'm glad I learned about this. I didn't know a whole lot about the show, and it seems like it's wonderful. You're doing good things. I appreciate being part of it.
Fantastic. And good luck. And like we say, all the details of Mark's courses, they're all there in the show notes. So do check them out.
Awesome. Great. Talk to you guys. Hey, see if you can make it. I want you guys to come and speak at my event. I know it's a big trip, but
we'll put it in our diaries, Mark. Yeah.
Yeah, we will.
Okay. See if you can make it.
Okay.
Yep.
Talk to you later. Bye.
Bye. Thank you for joining us this week. We do hope you enjoyed the episode. If you want to know any more about AlphaMind and our services, please do check us out, alpha-mind.net. Thank you to our podcast sponsor, the Society of Technical Analysts, the STA. You can check them out at technicalanalysts.com. And as a reminder, listeners to this podcast can obtain a small discount on their brilliant home study course. You can find out more about that on our website, alpha-mind.net. We look forward to you joining us for future episodes, or do feel free to check out our past back catalogue of episodes on the AlphaMind Podcast.com. Have a good week.